Well, if you were an economist, I hope you put your money down in Atlantic City or Las Vegas, because the consensus is the number. 232,000 jobless claims. That's up a little bit from 228 last week. It is still a very low number and suggests that the labor market, while it is cooling, is not falling off a cliff. Continuing claims, 1,863,000. That's up from 1,859,000. So a slight rise there. And we've seen that series rise for a little while now, suggesting it's a little harder for people who lose their jobs or who quit their jobs to get new ones, but it is still, again, a low number historically. So no problem with the labor market, and this is one more data point for Jeffrey Schmidt to look at as he decides whether he wants to go along with a rate cut or not.
Mike, we had a scare last year as well on jobless claims, and it's worth pointing out the journey of the last 3 weeks, and it's certainly been a journey, all right. It wasn't just the payrolls number on the Friday. The day before, we had jobless claims come in at 250. We had this really weak ISM manufacturing number as well. And all of that, including the employment component of that particular index, Mike, all of that basically got everyone a little bit fearful about where the economy was at. Do you think the data over the last few weeks has put all that to bed? Is it dead and buried? Is that story over?
No, I don't think the story is over, John, and we do have a big employment report coming up for August, the first Friday in September. But right now what we're looking at is a labor market that is pretty much the same as it was in June. In July, we got a lot of auto plants shutting down, so Michigan saw a big rise in jobless claims, and then we had the hurricane in Texas, big rise in jobless claims there that has lasted for a while. And so we had an unusual seasonal problem with the claims numbers in July, and now they seem to have sorted themselves out. We've gotten to the pre-July numbers again, and it just tells you the labor market is status quo.